Alrighty, everyone, welcome back. It is Dreaded D, the infamous pirate captain protecting T-Fuel Island. Today we're going to be talking about Spell and the power of the MIM token. Just please remember, this is not financial advice. Please do your own research. Anything that is said in this video is just for entertainment purposes only. And also, big shout out to our friends over at Theta Communications, Hubes. If you haven't gone and checked out the site, please do. Great dude, great supporter of the Theta ecosystem, and providing a lot of value for the Edge network and a lot of resources going forward. So, alrighty, let's dive into this thing. So, just like Theta, T-Fuel, Meter, and Meter Governance Token, there are two tokens in this ecosystem. A little bit different economics than the other ones, but you have Spell as your governance token, as well as your fee collector. You, as the Spell holder, will collect the revenues from the fees collected on the actual platform. Then you have MIM, which is the Magic Internet Money, which is the decentralized stablecoin that is on the Abracadabra platform. And MIM is cross-chain compatible, so you can move that between Phantom, Ethereum, Avalanche, Arbitrum, and I know they're looking to expand that even further. So with these two, what is Spell and MIM token? What is the whole purpose of this? What are they trying to solve for here? So the key is, really a good example is Yearn Finance. Right now, Yearn Finance tokens are, or LP tokens, liquidity pool tokens, are, they're interest bearing, but you can't really use them in a collateralized format. So what this protocol allows is for potentially you to take any LP token and use it while it's interest bearing as collateral, and you can borrow against that. So now you can take an LP token, borrow against that, get MIM, the stable coin, and then use that to either move back in or move it to Popsicle Finance or move it somewhere else that aggregates different yield. Or maybe you want to buy something, maybe you want to do something with funding, but you don't want to sell your LP tokens. And this opens a lot of doors, because when you're using LP tokens and yield-bearing tokens like this, they're still gaining in interest, as well as it does add a layer of risk, in my opinion, because you're using derivatives of tokens and then stacking on top of each other. So tranches. It's this is not without risk for sure, but it opens up the DeFi ecosystem. That's why people are calling it DeFi 2.0. It opens up the door to new and exciting ways to execute DeFi strategy, basically, and really enhance into the decentralized stablecoin. In one of the previous videos, we discussed how MIM and Do Kwon were talking in UST. I'm very excited to see how UST and MIM are going to be working together and enabling a decentralized stablecoin future, as right now we're seeing the whispers of custodial stablecoins being cracked down upon, which makes zero sense in my opinion, because custodials are they're chasing after ghosts, basically. They're chasing after things that they have no control over, and as Greg Asori said, they don't understand. Crypto is borderless, and because of that fact, as we've seen from other countries that are hungry for capital, they're looking for citizens. They're looking for good quality citizens that have capital, and crypto capital is just as good as any capital. So they have to walk a fine line, because if they do not handle this properly, innovation will leave the states. And if they tax the bejesus out of everybody, well, that is going to end up leaving, and everyone else that's still here is going to be left holding the bag. So it doesn't really solve any major issues. So I think them chasing, after stable coins or any of these, is they're chasing after ghosts. It's either you want the innovation, but you also want the tax revenue, but at the same time you can't have your cake and eat it too. It's this constant battle back and forth. But anyway, let's get back into this thing. So let's dig deeper into the Spell token here, all right? So Spell token operates in a very similar way to Sushi and the Sushi Bar, if you've ever used Sushi Swap, and X Sushi, which basically the fees are accrued to a secondary token, X Sushi in that case, and then paid out and are redeemable into the originating token. So this is the same with Spell. So you have Spell and you have S Spell. So if you want to stake your Spell, you convert it to S Spell, and that is where it begins accruing, because that's where the fees are being paid into from the lending and the borrowing side of things. So there's also other options and other strategies that are now available for Spell and S Spell. Now there are pools on other exchanges. I think Rari's got one where now you can stake your or borrow against your S Spell and Spell, and you can get stablecoins for them. Same on the platform as well too. I see they've enabled this, and you can now utilize this in a totally different way. So you can either stake it or you can borrow against it. So, and anytime there's a liquidation that happens, each asset has its own liquidation fee as well as its interest fee. So those interest fees are, what are paid in, and depending upon the riskiness of the asset, they're going to be at a different varying amount. They've added a lot of assets in the recent days, and I'm excited to see how many assets they're going to be putting onto this. As I see things like FTT is on here, Phantom is on here, even Shiba is on here. I see Ohm on here, Olympus DAO. These are big, DeFi projects that are, and the fact that you can take these things as well as these liquidity pool tokens, you can then borrow stable coins for these and then utilize those for other DeFi activities is pretty big. Compound that with any potential collaboration with UST, you have an interesting way to unlock capital. So this is really what XPRT and persistence is. It's all about unlocking the collateral value of an asset, right? And understanding that you can do more with it than what it really is. Okay, because like right now with staking, if you don't have liquid staking with proof of stake, alternative use cases for the token could potentially cannibalize those networks. We've explained this in previous videos, but to reiterate, if I'm only earning 1% on a token, staking it here, but then a DeFi platform allows me to earn a certain yield on it. If everyone goes and chases the yield, what happens to the security mechanism of that POS chain? It could potentially fall apart or become catastrophic depending upon the safety nets and, that current network. But that's just a, very basic example of that. So liquid staking or alternatives, things like that, or the ability to unlock things is going to be huge, and being able to get stable coins for these is very, very significant. So the Spell token distribution, this is very, very heavy into global farming incentives, and it's with 30% to team tokens, and vesting periods where 50% are over the first year, 25% over the second, and 12.5% over the third and the fourth year. Until they're fully vested. The 63% to supply to incentivize across multiple LP pairs is one way of doing a distribution between tokens. The big challenge, I guess, with this kind of model is you have things like, Sam Bankman-Fried, Alameda Research, where him and the team were known for taking huge chunks of cash and dumping them into farming ecosystems just to create cash flow real quick and dump the token. Now, so that can definitely lead to downward pressure on the price, especially with an emission schedule like this. It all depends on the momentum of this ecosystem and how everything's going to play out, because currently with these economics, it's not ideal from a capital, allocation perspective, unless people are locking up these tokens in massive amounts as they're earning them, which there is a ton of options for high yielding returns for these tokens. So the global farming incentives, the yield that you'd be getting by receiving these tokens and then also applying that to do things with it is compounding. So one would think, okay, with 23% on the staking, as well as the potential to borrow against it and other options as well too with LPs, that people that earn these in the farming incentives it'd be more wise to utilize them and earn upon them as things proceed. But obviously people want to make money, and there's momentum in the space right now. That's something to consider for sure. And the team, November 1st, yesterday, they burned like 8 billion tokens, and they reallocated, and it was voted upon and passed. And they're making progress, and it seemed to be very transparent. If you go on Twitter, Danielle, that's the main page I would follow. I'll put the link in the description below. But yeah, with a allocation like this, it can be challenging to see price appreciation unless there's exponential growth. Now, let's just not look at the downside, though, either, because, farming incentives can be utilized in a proper manner, and because this is a liquidity-based token, and it's all about liquidity, you need these kinds of incentives, because with farming, you'll now have deep liquidity across multitudes of exchanges, and that will provide immense value to the user base. As well as you got a 10-year halving model, which they're going to follow, and that will cut the rewards over time as things grow and as things distribute. So it's the same as a lot of other token models, which subsidizing the costs and utilizing the tokens as incentives to get to a network effect or exponential point. So, and we'll dive into that a little bit deeper in the next section. So let's dive into exponential growth and what's been happening with Spell Token here. So with Spell Token currently, we've seen a massive rise in the TVL over the past 2 months. And I would say it's exponential for sure. You got $4.21 billion already locked up in the actual utility of the protocol. And 2 months, that's the curve is strong right now. So a lot of people use TVL, so total value locked, in contrast to the governance token, SPEL. So right now, the TVL is $4.21 billion, and the market cap of SPEL token is only 2.5, I believe, 2.5 billion. So, if you put it as a ratio, one being they are equivalent, your SPEL token is trading at a 0.59 right now relative to equivalency. The only reason why I don't usually use TVL as a true indicator is that if you go through every single pool on DeFi Llama or every single protocol on DeFi Llama, the majority of them are trading at a discount, which either means that every single one is trading at a major, discount, or it's that the governance token relation is not fully equivalent to the actual token. But, maybe everything's just trading at a discount. I'm just saying, look at these indicators. It's one thing that you can look at as a metric for, quote unquote, fundamental analysis. And the one thing I'll say on that is that with Spell, at least, with liquidity pools and adding new ones to this protocol, and having multiple chains be involved with this protocol, if you have ETH LPs, if you have Avalanche LPs, if you have Phantom LPs, if you have, just tons and tons of different tokens that you're able to borrow against, the exponential growth right now is we're just getting started then in that case. Because if you can then borrow against those LP tokens that have more yield than just holding a capital asset, and then you combine that with things that Danielle's working on, like Popsicle Finance, which basically aggregates a simple way for you to mitigate the whole issue of impermanent loss and all the stuff that Uniswap has going on right there, and the misunderstandings that come along with impermanent loss. So when you have things like that and protocols where now you could have LPs that are built on Popsicle Finance that negate all that impermanent loss issues and put you in a strategy that's solid, well, now you can borrow against that and you're in a comfortable position where you're earning interest on the LPs. That is helping to pay the interest for the loan that you're taking. At the same time, you're free in the clear to utilize that money how you see fit. So with all these LPs that are going to be coming about and basically opening up this new section of DeFi to all this exposure and this lending, you're opening up a can of worms. So right now where we are with the TVL, this could just be the beginning. Now, at the same time, things could change. Another protocol could come out, all this other stuff. But right now, in my opinion, they are the exponential leader going into the December season. And they're showing strong momentum. And nothing's off the table. Look at what Shiba's at. And, I talked to some people about this earlier. It's like, if Spell hits Shiba level, which I think it very well could, you're at a 50-cent mark per Spell token. And you're earning yield on it. And you can do a bunch of stuff with it to, create yield on top of that. So there's a lot of factors at play and nothing's off the table right now. Even with the ridiculously high token allotment to the Spell token, a lot of it's about community, and community growth is just driving demand in this space right now. It's commanding price action rather than actual, we could say, theta. Theta's not really in the, the daily, degens face every single day. And, that's going to be a good thing, because we're going to see a lot of people say, man, I wish I had seen that coming with theta. But with protocols like these, they are riding that momentum, and LPs and DeFi, these are all things that are becoming more and more popular. These products are going to become necessities to garner yield, and it is the bridging and breaking of the old system and breaking into the new system. And that's what's so amazing about these. And Danielle and these guys that are building this, it's cool to see that they have been honoring their community and showing that they are leaders. Popsicle Finance, they suffered a hack over the summer, and they paid back every single user and rebuilt it from the ground up. And now they're working on the launch of their the next iteration, basically. And with that will allow you to do a lot of stuff. So there's a lot of different aspects at play. But these people are becoming thought leaders within these communities, and they are gaining trust and listening to the people on Twitter, reading through the comments, and seeing what people actually want. And that's huge. It's becoming a whole movement in itself, and I think it's only going to get bigger from here. So to not view and look at Spell token, at least from a strategic point of view, I think is a mistake. Could it fail? Yes, it could fail. We're in an experimental space. There's always risk. But these are people that are becoming those thought leaders, and I think that's important, because just like Andre Cronje with Yearn Finance, he became a thought leader. A lot of people got into Phantom at like 3 cents because Andre Cronje basically said, I think there's something interesting over here. And look at where those people are now. Because these thought leaders are their voice and everything that they're doing. They don't just say things without reason. You do have those people like Elon Musk and other people that just say things, poo-poo all, But then you have these people in the space that are actually trying to not just inject themselves into the story, but become a hero or the main character. And those are the people you want to surround yourself with, because they're going to help you bridge into the exponential age and are going to, take you along for the ride in a good way. So something to think about for sure. So let's just talk about how important it is that this MIM token is a, cross-chain compatible right within the abracadabra.money website. You can bridge your stablecoin from one chain to another chain depending upon what DeFi you're trying to get into that you borrowed, or a strategy that you want to dive into. So this opens up a lot of doors. They're utilizing AnySwap. Super, super good right now. Things are proceeding very, very well. So yeah, just the ability to go from all these different chains, and I'm sure that they're going to expand chains, and I hope to see things like Theta or other things, and hopefully they get put into the team's view, and we'll see what happens from there. But yeah, they are quickly becoming the mainstay stablecoin. As well as in connection with UST. UST is looking to work with them and help the collateralization effort for this derivative stablecoin, basically. So the other thing to mention too, MIM is now one of the base pairs on Bitfinex, which is like the first time like decentralized stablecoin on a centralized exchange being a base pair. So, and I think we're going to see more of that as custodial cryptocurrencies, discussed this about before, are getting cracked down on. You're going to see these things come to fruition, and that's why, I've been super bullish on Terra Luna. I've been super bullish on, with this now. This is because these things break the mold that the government bodies don't even understand, because things are moving exponentially, and things like MIM that are algorithmic stable coins or trade via, you can mint for this based off this and have arbitrage, just like Terra Luna. These bring about certain advantages, and they're going to be amazing to see. So in the next section, we're going to talk about Popsicle Finance and what that brings to, the DeFi space, as well as what that brings to Spell and what that opens up and how that works together with Spell and provides immense value. So we'll discuss briefly Popsicle Finance, which is a whole other project, but it's made by the same person, Danielle, and this could be a whole other video in itself. So we'll just get like the basics and how this relates to Spell and abracadabra money, basically. So with this allows you to enter into DeFi strategies or Uniswap pools, LP pools, and aggregate them properly so that you're not at risk as much to impermanent loss. So it's a way to aggregate yield without putting yourself in a position where you are constantly worrying about that and whether you're capitally efficient in a certain position. This automatically reallocates and readjusts depending upon the positioning that you take. The other thing too is it's just making liquidity pools simpler, because liquidity pools right now, they, in the words of Danielle, they suck, because you have to buy one side of the token and then the other side of the token. So you have to buy, in this case on my screen here, you have to buy the USDT proportional to the wrapped Ethereum. Well, with Popsicle Finance, you can either join proportionally, or you can use, you just have wrapped ETH, you can just use that and they will reallocate it for you. And that way then you don't have to go about and, Uniswap right now, spend a bunch of gas fees and do this and that. And you can also, do a bunch of things on other chains as well too. So with that simplifies a lot of the process. And I think that's, having to buy both sides of the table is what negates a lot of people from entering a liquidity pool. So making things easier for people, making the barrier to entry easier, all these things are what the user wants and listening to user. And that's really what I like about Spell and Danielle and his projects as a person. So is listening to those people and what they need and what they want. So with LPs and aggregating this is great for things like Spell, because now you have LPs that are efficiently being run, and if they're run well, you can then potentially provide liquidity and collateralize that, and you'll be earning interest on that in an efficient way where you're not scared or worrying about impermanent loss. So maybe you feel risky. Maybe you take an LTV that's 40 or 50%. I know there's people that take 75%. That's way too risky for me because I don't want to get liquidated, or if there's any kind of craziness or it's a crazy pair. But yeah, then you freed up all that capital to either go do other yield strategies or, buy that Lambo that you wanted, whatever you want. So it opens up the door to a lot of things. And I think this video is just kind of the tip of the iceberg, and there's a lot of resources online. I'll put Danielle's Twitter in the comments below. But yeah, this is something to definitely look at as we start unlocking the value of these financial products in ways that we haven't even thought of yet. This is just the first step. So We're going to be diving into this a lot deeper later on, but I think decentralized stablecoins in general, MIM, UST, that's kind of been the trend for a couple videos in the past, and that trend is starting to become very, very strong as we talk through these things. And it's kind of leading us down a research rabbit hole that's pretty cool to see. So if you like it so far, continue enjoying the journey. I think we're going to end the video there. Hopefully this gives you a little background on MIM, Spell, and what they're trying to do with liquidity pools and how that can provide value to a lot of people. So yeah, let me know what you think. If there's anything I missed or what you want to hear next, or dive into deeper more on, let me know. Alright everyone, hope to see you on T Fuel Island, and keep enjoying the journey. Alrighty, have a good night.